Hello, everybody. It's Greg. This bar that formed on Friday was so suspect to me. And look, you just never know what's really going to happen in the future. You just don't. I just know historically that what happened on Friday was unusual. I still don't know why it happened other than the end of the month, but why was it so broad based was confusing. At the end of a quarter, sometimes the end of the month, not so much the end of the month, end of the quarter, you get this what's called window dressing, where mutual funds want to buy the strong to get it on their books. Well, okay, they didn't only buy the strong, they bought everything, essentially, turned around. So we're getting this big reversal bar here on the Dow. Now, I don't know where it's going to close. It's about 1 o'clock now. If it was to close like this, I suspect it would go down, and it might go down below this low, thinking about a measured move. Again, you just don't know, but it's possible that it would come down. You always look to the left because measured moves historically, excuse me, end next to some support. And there is no support. There's the 200. So probably not a measured move, just based on that. Maybe a little bit below. Or, look, we're getting a bottoming tail bar here, midday. It might just begin to turn around, and this just might be part of a bottoming process. What I wrote in the weekend letter, and even pre-market, was that we need more information, and we're getting that information. And from my point of view, I think it's good information. Not that it has to go lower, but I think some chopping around here, maybe we get a little follow through lower and it flips back up and our internals start to line up, could be a good situation where things start to move up. We don't know yet. And a lot of times trading, there are points where you don't know, so you stand aside and you wait for the information within the time frame you're looking at. And so let's look at a few others here. S&Ps. So we had this big old bottoming tail bar. And if you remember the video from last Friday, it was talking about this bottoming tail forming, and it should be ready to make a turn because it was at 5,200. And then it was like, oh, will it tag the 50? And it didn't. All right, so now this pullback, for me, appears to be, like everything, more normal. Is that what would not have been more normal according to my line of thinking? Well, for this thing to just take off and make new highs, even though it is a bottoming tail correction bar, it just typically isn't a setup that would do that with this rounding top and this big red bar here. So again, if we can get a little more backing and filling, coming down a little bit more here, maybe we'll have something to go on. Hey, if it turns into a bottoming tail bar at the end of the day, I think it'd be unusual after it's pulled back this far. Again, we'll see how it plays out. Now the Russell gap up, and it was the strongest pre-market, and this is coming down a lot. So typically bars like this don't get completely turned around when they've fallen back this far. We'll see where this goes. SMH's been the strongest, pull back. Now this kind of a pattern, making a lower low and a turn, that would be ideal. And we'll see if that happens on a weekly chart. Excuse me, that would be very attractive because it would be a buy setup on a weekly chart. Qs, similar situation, strong, coming down here, 20 MA. At that point, a little backing and filling to make a turn. So, look, the short answer to what I'm explaining is here is, again, we need more information, and once we get that, we'll have higher probability setups to see where we'll be going. Biotechs were strong, topping tail. So there's pretty much selling almost across the board here. Financials, which were strong, giving it all back. Reversal back down. Come back down here to this lower low, and we'll see if it makes the turn there. Now, what's also interesting, right, is that what has enabled the market or helped the market to advance is not helping at all, and that's bearish. And so we've got interest rates coming down, little breakout failure coming down here. And as we know, when interest rates would come down, the markets would go up. And now that's not happening. In addition, we've got oil breaking down. So what does this mean? Well, for me, it means that the markets are viewing these weaknesses that were viewed as information that would enable the Fed to lower interest rates. And to some degree, this is true. But I believe the markets are starting to believe that we're going to have a recession. So, interest rates coming down. The belief is there will not be a demand for money because of a slowing economy. Oil going down. Slowing economy. Slower demand for energy. We'll see how this unfolds in the coming days. Short-term interest rates are not doing anything. They're just flat here, a little bit lower. Maybe a little bit of a good thing. But look, I'll say it again. In a few days, maybe tomorrow, there's plenty of economic reports coming out this week. We'll just see how this all shapes up and looking for much higher probability setups. As always, if you have questions, email Dan and I, Dan and Greg at Master Trader.